Now let's see when we go live here. We do need a little song or a tune or something for this part. And there we go. So hello guys. We're live? Yes, we are. All right, so welcome back to week 6, I believe, of our Intro to Trader series. First of all, apologies for the 2 weeks off. That 100% me to blame. I was traveling around trading or giving trade ideas to the world. My little pilgrimage there, but I'm grounded for the foreseeable future anyway, so we should be back on track. So again, if you're new here, basically we're taking a handful of people who work with trade ideas but not exactly traders, and are teaching them kind of from the absolute basics of trading all the way up. Quick wrap up of what we've done so far. We've gone from what is a stock, through how exchanges and brokers work, through different types of instruments, basic technical analysis, candlestick setups, and trend following. And today we're going to go into technical patterns. Again, just to kind of keep going on our psychology of trading. So move this a little bit. So again, last week's wrap up, which is actually 2-3 weeks ago now, we went over the basics of trends. So we started with the basics of technical analysis, support and resistance, trends, and this type of thing. So just like other weeks, I'm going to open it up to if you guys had any questions about trends or trend analysis or anything like that. And I do have the chat room under the video open as well, so feel free to pop in there and type a few questions if you got them. So any questions from the class? No? All right. So we'll just move on then. So just essentially a little quick wrap up of why we're going over this, and the fact that this is so important is essentially the market. If we go basically to what the objective is of trading, it's buying low, selling high, buying high, selling higher. It's essentially to capture a trend, whether it's a short-term trend if you're trading 1-minute candles and you just want to be a day trader and a scalper, or if you're looking for investments, you want to get the longer-term trend out of it. Essentially, it is the only way that you're going to make money is by trading with some sort of trend, whether shorter term or longer term. So it's this, along with support and resistance and candlestick analysis, we're starting to get kind of the phases together of how we're going to build a trading plan and a trading setup. We talked about how in a trend, quite often something that was support before will become resistance as things move, and you can use these areas to try to get onto that trend, either whether you're going to be trading breakout, which is continuations of trends, or whether you're going to be buying pullbacks into trends, or however you'd like to do that. But again, I try to boil everything down to the simplest possible form. So if someone says, what's the objective of trading? It's essentially to get on some type of trend, whether it's longer term or shorter term, in some respect. So now we're going to talk about technical patterns. So these are kind of veiled a little bit in mystery, and my goal here is to kind of demystify them. So this is where, if you would pick up any very traditional technical analysis book, they're going to teach you these basic technical patterns. But again, I feel my job is to kind of show the crowd psychology and everything behind that, because it's really what I've been pointing to is kind of the synopsis for the way that I trade is by looking at what I think the rest of the world is going to do in any situation. So, we're going to talk about the psychology behind it, and again, to remember that no pattern is magic. That's the pushback people will get from any trading style whatsoever, where they'll say, okay, you said that in this technical pattern that this would be the move that would come out of it, and I didn't see that in this respect. And just to go back to the point that nobody is right all the time in this game. The best traders in the world have a 55 to 60% win rate, and anyone who says that they're 10 times better than that is lying to you. So what we're trying to do is we're trying to get to that 60% win rate, and then to make sure that we're using risk management so that when we're correct, we make more money than when we're wrong, which is one of the reasons that I really like these technical patterns, is because it gives you a very clear area to know when you're wrong and to get out. So I always try to equate trading to a game where one would flip a coin. So if I sat down with Marissa and I said, okay, we're going to flip a coin. Every time it hits heads, I'm going to pay you $2, and every time it hits tails, you're going to pay me $1. Even though your win rate is only going to be 50-50, that's going to be a game you're going to want to play every day, all day, because in the long run, you know, you're going to have winning streaks and losing streaks and all of this, but in the long run, you're going to make money. And that's essentially what we're looking for with these types of patterns and trends is the focus to stay on the trend is to make sure that the direction is in your favor and that we are kind of making what we expect to be making, and we're in the direction of the market. And then the technical pattern is to make sure that we know, okay, you know, our theory or synopsis is invalidated at this point, so this is when I'm going to get out, and then hopefully that's less of a move than when I'm wrong, right? So essentially here is the very basics behind. These are the two patterns that I would encourage any new trader to study, and are basically kind of my go-to patterns as well. And this is just comes down to trend trading with support and resistance, right? This is where we start to kind of combine everything that we've been talking about as well. And essentially they're flag patterns, a bull flag and a bear flag. So the theory behind it is you have a trend in any sort of stock or financial instrument, and the trend is higher. And then after the trend is higher, you have a bit of sideways movement, right? Where the stock just kind of bounces around. So what a pattern like this tells you is that A, the buyers have been in control in the recent past, and then B, there's a break being taken here. There's a bit of exhaustion happening. So a friend of Trade Ideas, and again, someone that I've sure I've mentioned a few times, we'll mention again, Brian Shannon, always says that stocks can either correct movements over price or over time. So essentially we know nothing goes up forever, right? So there's two ways for a stock to take a break. One way is to move back down, right? Where we talked about where if you were buying in through here and you had a big move in your favor, you're going to be selling, and that selling can force the price down. If when the price is being forced down, it's being met with buying pressure as well, it's going to reach kind of an equilibrium like this. So I know you guys like my examples. Some people think I'm crazy with my examples, but I kind of equate something like this as like a fat guy running up a hill. You know, there's two things that are going to happen if a really fat guy runs up a really steep hill, right? He's going to fall and tumble back down, or he's got to take a break, right? So with bear flags and bull flags, basically what you're doing is you're basically betting on the guy getting off the bench and running in the same direction he ran before, right? So in this pattern, right, you can see here Starbucks, we have a nice big down move. Then after that, we reach a point where the buyers kind of step in and say, okay, this price has gone a bit too low. But you can see that every time the buyers step in, they're met with more sellers. And then the sellers come in and they're met with more buyers. So basically you have this fight that's going on here. So the pattern basically begins itself when there's a break of this pattern, when no longer are we seeing buyers come in and buy at higher and higher prices, right? So if we go here to Facebook, you can see that there was a point right here where this trend of buyers buying at higher prices kind of gave up, and kind of shows the market that whoever was buying there, whether it was someone who was short up here and made a bunch of money, or whether it was someone who was making a kind of counter trend bet that this thing would reverse, gives up. And then after that give up period, the stock falls out. So then for the inverse side here, this is how old this chart is. Research in Motion makes blackberries, and I don't know if anyone's ever seen a BlackBerry in the past 10 years, so these must be pretty old charts, but the same type of move, right? We've had this strong move up, and then sellers come in, but they're not able to push it down very much. So as the stock moves lower, every time we push down, there's buying pressure that's coming in underneath. So the pattern starts when the sellers who've been selling at lower and lower prices give up, and that will create that upward buying pressure at the same time. So why is this the case, right? So one of the reasons is that if you shorted this stock, if you bet against this rally kind of right here, you would probably say you're wrong at this point. If the stock moves up and then sells off a bit and you shorted it, you'd probably say, okay, if we make a new high, I'm out. So that's what these bear flags are doing, where if they curl back up and trigger a new high, all of these people who bet against it here are now wrong. So they have to get out of their position by buying. And then there's technical traders who watch these type of patterns who are going to wait for this moment to buy. So that kind of double edge of buying will create these patterns that push quite higher. And as I talked about before, is you would know pretty clearly on both of these setups when they got invalidated. So if, for example, this pushed down and created this flag bullet pattern, you might say, okay, well, it's going to be invalidated if stock comes and pushes back up over this price. So now not only are you trading with the direction of the trend, not only do you have an area to say this is where I'm going to get into the stock, you now have an area to say this pattern is invalidated at this price, therefore I'm wrong here, and you know where you're going to get out. So most of a trading plan is already done. You know, there's risk management, there's where you're going to take profits when you're right, but you know where to get in, right? And you know where you're wrong. And those really are kind of the two hardest parts of trading. And same with here, right? As this kind of breaks out of this flag, you would say, okay, well, if we get back down under that, I'm wrong. So now you know what your risk is, which is this area. So you can say, you know, if I'm going to risk $100 on a trade, you know the size that you're going to take, you know how many shares to buy to realize that risk. And it just kind of, it sets the formation. So is this making sense to people? A nod, a question if it's not?
Can you make that larger?
Maybe. Oh, maybe not. If I was on my Mac, I would know exactly how to do it. Is it control? Nope. No, I can't. But I'll show you a couple better patterns later, and I'll make it bigger for sure. The next type of pattern is somewhat the same. You'll see a lot of these will look somewhat similar and have the same kind of synopsis behind them, where you have a falling wedge and a rising wedge. And essentially, I like to look at these as battle points, right? So you have the stock moving up. So here's the trend. At this point, you have sellers coming in and pushing the stock down. But you can see each time they try to push the stock down, they're able to push it less of a distance than before, right? This kind of shows the market that potentially the sellers are running out of steam and the buyers are doing a pretty good job of holding up the stock. So kind of think of it as pushing a slinky down, right? These two sides are fighting, and as they're fighting, they're giving less and less ground. They're getting closer and closer together until something explodes. And that's what a lot of these patterns are looking for, is saying, instead of getting involved in the fight between the buyers and sellers, you let them fight, and then you just figure out which way is the winner, right? We know we want to trade in the direction of the trend, so we want this to look higher. So we would look to buy as soon as we see the evidence of that battle ending. But if the sellers won and it pushed back down here, no harm, no foul to us, right? Nothing bad has happened to our trading accounts because we simply haven't taken any action. So in this case, you know, the buy point would be above, right, where we see the sellers continuously trying to push the stock down, and then our stop point would be right below where we've seen buyers before hold it up, because if we break under this area, we're saying whatever buyer was sitting here holding the price up is gone, right? And this in particular is one of my most favorite setups, because again, what you'll notice is as we go through these, some of these may click to you a little bit better, and those are the ones that you should focus on. And here on the other side, we have the same type of thing for a downward market, right? Where we have this sell-off here, buyers come in, they push it up, sellers come in, buyers are showing that they're stronger on each rally, they're willing to buy at higher and higher prices, but when they give up, the rest of this trend ends up continuing. So here is probably what I should lead with, because it probably makes a little bit more sense. This is the very kind of stereotypical pattern, where essentially we looked at this when we were studying a lot of support and resistance. Essentially a double top and a double bottom means just that, right? We're looking at areas where in the past, when the market came up and hit this area, there was a big seller here, right? That pushed us down. So if we come back up to that area and that big seller is still there, there's a chance that the market won't be able to take him. That he's too big, he's won. So there's a lot of times where more sellers will join him, buyers will be scared of the last time this happened, and that will push the price down, right? So then, generally speaking, where it says double top confirmed, what people will do is they'll say, okay, well, stock price moved up, hit this giant seller here, pulled back a bit, and then pushed up. So I'm going to watch this area where last time buyers were seen. If those buyers aren't there this time and we start to move lower, that's when I'm going to sell the stock, knowing that last time the bulls were able to mount a little bit of a defense here, and this time they failed entirely. So if basically you know that there's a seller up here, so like with the other patterns I showed, you know exactly where you're wrong. You're wrong if we retake this area in particular. And same on the double bottom, right? Stock moved down, a buyer showed up here, we pushed up a bit, we came back down to retest, and that buyer's still there. So again, we'll never know who that buyer is, we'll never really know how big that buyer is, but it could in theory be Warren Buffett, who's just decided whatever the stock is, he wants it, and that's the price he's willing to pay. So no amount of selling may break this guy. So as we push up again, basically it's the winner of a war, right? So that's what the analogy I keep using, and I hope it's hitting home, where, you know, the trend is showing you overall who's winning. You know, if the trend is up, the bulls are winning. If the trend is down, the bears are winning. And we want to be on the side of that person, whoever's winning the battle. And these patterns are basically taking the support and resistance that we talked about before, and it's saying, here is where the actual battle lines are drawn. And we're going to wait until we know that one of them in the shorter term is winning as well. So we've waited for the bulls to show us that they're winning in the longer term, and then we've waited for them to show that they're winning in the shorter term, and then we've waited for them to win a singular battle. And when they win that battle, that's when we're going to make our move. So again, any questions? Certainly let me know. This one, can I move this without it? Here, we'll go off screen for a second here. So here again is more of the same. So essentially, head and shoulders patterns are trend reversals. So we talked about trading with the trend, and then we've also talked about how the trend doesn't last forever. So there's some people out there who love to try to catch the turning point of that trend. And this is a pattern that you'll see that will come up quite often when people think the trend of something is turning. But again, it boils down to this theory that we've had before of where is the most recent high and where is the most recent low. So where have the buyers shown their presence and where have the sellers shown their presence? And essentially in each of these patterns, you're gonna see the same thing. It's simply it's putting a name to looking at where the buyers were and where the sellers were. So in a head and shoulders pattern, basically what we did is we had this downtrend that we talked about last week or however many weeks ago. But this time, when the sellers came in, buyers met them at a higher price. So a trend is typically buyers coming in at lower and lower prices and sellers coming in at higher and higher or lower and lower prices as well. Whereas this, you can see this buyer here kind of disrupted the trend. So what they'll say is that this essentially is now a trend reversal, right? If you look at this side of it, it looks like a downtrend. And then if you look at this side of it, it will look like an uptrend. So these are the more kind of advanced patterns to see. But again, the main thing I wanted to note with all of these, because I'm going to send you kind of a cheat sheet that you can look at that we'll go over to memorize the patterns. But what I wanted to show you is that none of these patterns are magic. None of these patterns, even though they've put names to them, every single pattern is some sort of derivative of just this basic trend that we've talked about before, right? Everything is based off both trend and support and resistance, where, you know, back when we first started, we just looked at, you know, something like this and we said, right, this is support and this is resistance. And right, support was always at the same price and resistance was always at the same price. But that's not really how it works in the real world, right? These things are fluid and they change as time goes on. So just what I wanted to show you is that the same theory still holds, right? Where this is this resistance line here, but support wasn't just right here. You know, we took a little break through it and then buyers came in. So we put names to this for the same reason we put names to everything else, where it's basically we just want to have some sort of cheat sheet in our head, which, you know, again, I'll give you guys. But again, the synopsis is it's all based off this same two theories we've been talking about. Where are the buyers, where are the sellers, and where's the overall trend, you know? Is this the last? That's the last one for this week. So this was a fairly quick one, but I will show you some examples and then your homework as well. So first of all, any questions at all? I know this is a bit of a weird one because I just threw a bunch of pictures at you, but I do have this loaded and I have some scans for you here that I'll be giving you for next week. And these are, again, made by Andy. I feel like Andy's as big of a contributor to this as I am, just building these scans. But essentially, I talked about at the beginning that these are my two favorite setups, the bull flag and the bear flag. So what we did within Trade Ideas is we built you these scans that you can take a look at. And what I want you to do, which we were talking about earlier, is essentially go through these every night, but then pick and say, you know, what would happen if, for example, this one. So this program you see me draw on the screen here with, it's called Epic Pen. You might want to get it. It helps me anyway draw these patterns out, because basically the hard part is in the real world detecting them. So what you want to look for is where the buyers and the sellers on each individual setup is, knowing that all of these are going to be flags in some respect, as best as we can, kind of mathematically expressing these types of patterns. So something like this, I want you to look at, and I want you to say, okay, well, I would buy it at this price, right? And then my stop would be at this price. And then write that symbol down and then track it over the next couple days and just see whether or not A, it triggered, it got to the price that you were interested in buying it, and then B, whether or not it would have been a profitable trade, and start to get a feel of how these patterns will work in real time. And with here I'll basically give you two. There's a couple here that are bull flags. So again, they're essentially looking for big strong moves up and then either pullbacks, right? Or big strong moves up and sideways movements. And then this setup here is just the inverse of that. So bear flags. So big, you know, pushes down and then sideways movements, or big push downs and horizontal movements. And essentially I want you guys to look at both sides. So pick a few on the long side. I know there's only one here that meets the criteria today, But you can see that even though they're sloppier than in the examples, which is why, you know, we cherry pick examples for learning, but the patterns are still here, right? Whereas this one looks like it would have triggered a little bit today. But, you know, this is why we went through candlesticks first, right? Because you guys know that this triggered a bit today, but then came right back up into the range. So you may say, okay, I'm not interested with it there. Or you might say, I'm going to give it all the way until this area. And you can see how slowly we've gone from, you know, this is what trading is, to now this is going to start to be, this class here is going to be the start to be the beginning of your ability to trade. Like you're building a trading plan from this point on, where now you know roughly what trend is, right? You know you want to be in the direction of some kind of trend, either short term or long term. And with these patterns, I want you to pick one or two. Again, these are my favorite, but I'll send you that cheat sheet. And if you need a scan built for any of the other ones, let me know. And then I want you to paper trade these stocks, which essentially just means, you know, this is where I would have got in, this is where I would have got out, and I would have bought, say, 100 shares to make the math easy for you. You know, I would have made X amount of dollars or lost X amount of dollars. And we call it paper trading is because people will actually, you know, on a piece of paper, write down the trades they would have made and sum up their wins and losses throughout, along with a little note saying, you know, this is how much I've learned, essentially. You know, so I've made this, I've lost this, and this is what I've learned on every trade. And that will start to build what you want to trade as a trading pattern. You know, I'm showing you what I like to do, but you guys might hate it, you know, and might want to do something completely different, which it's hugely important that you trade kind of what it is that you like to trade. So here, the same thing, right? Big up move, and then just kind of taking a break here. So again, the fat guy running up the hill on Discover Financial, right? Is it possible that this thing breaks out and continues to move higher with a stop right here? You know, just a feel of how things are working. So I'm going to open up questions to...
Question.
Yep.
A couple questions, actually. So
back here.
when you're looking at the patterns, you're not really so much looking at the colors of the candles or anything, right? You're just looking at the patterns.
Right. You're looking at the overall pattern. So the important of the candlestick analysis that we talked about is that you'll know what each individual candle means. So you'll know roughly how long. So MIC, for example, right? The reason I taught you candlestick analysis was so that you knew exactly what this little doji means.
Bigger? I mean, I'm about to put my eyeball on this screen.
I can zoom in a bit here too.
Thanks.
Is that better?
Yeah, and the price, because I mean, if you could remind me, when we're looking at the price of the stock, you just go all the way to the right, and then you see like 40, 46, and that's where, like, what does that align with?
So this is where my mouse is, right? So if you just wanted to say, okay, I'm going to get in under this candle, you can just hover your mouse here and you can say, okay, that would be where my entry would be right now. It's like 40.10. The other thing you can do is if you look up here, I can't make this part bigger, but you see O, H, L, and C in the top of your chart. It'll be the same on the web version as well. If I hover over a candle, you can see that those numbers have now changed, and what that's telling you is the exact high, low, open, and close of that candle. So for example, if you wanted to short under this candle, you can just hover your mouse over it, and up on the top you can look at where it says L 4018, and that's the low of this candle. So then if it breaks down, you know that you want to get in at 4017 or below.
That's some sophisticated software right there.
It's good software. And then again, you can start to combine these. So these are the ones that I gave to you, but again, I do on my YouTube channel over at youtube.com/bonpara. Shameless plug there, but where I every week pick 4 potential longs and 4 potential shorts, and I trade them throughout the week, and then I show what the P&L was at the end of the week, and then we do the process again. So I build a little mini portfolio, and I share it to people, and then show them at the end of the week how it would have done. And what I do, some of my favorite scans for those are scans like this, where it's essentially combining what I'm giving you with something that I like as well, which is the bottoming tail candle, where I talked about how essentially a bottoming tail candle means that sellers came in and pushed throughout the day, and then buyers came and bought that at the end of the day. So you'll see that here we've got 1, 2, 3, 4, 5 in a row. So I look at that and I say, okay, well, there's somebody here who's waiting for every single dip on an intraday basis and buying it. So I take, the trend, which is higher, and then I combine it with the pattern, which is the bull flag, and then I combine that with candlestick analysis, which is the wicks that I just told you about, and then I combine that again with what we'll talk about next week, which is an indicator for a moving average. So then when all of these things align, and again, the beauty of this neat software that you told me about is I don't need to hunt for all of those. I simply ask the system to give me those exact parameters, and it spits them out both long and short on this type of list. And then from there, I can just scan using my eye to try to figure out which ones I like the best. So basically, in the future, you'll combine the candlesticks, whether they're green or red or up or down, with the patterns. But for now, I just want you guys focusing on kind of taking these tools and saying, okay, this is the pattern that I'm interested in. And you can see sometimes, this is supposed to be a bull flag, but you can see sometimes just trying to take math and put it into a picture doesn't fit perfectly. So that's why the human element we still think is important around here. Where can I get this program? Is in chat. This is Trade Ideas. So you go to www.tradeideas.com. I believe Barry's link is still under the video. So if you scroll down and click on that. And what is your YouTube channel again? So for those two questions, I'll actually just copy and paste some links in the room for you guys. So stay around after we turn this off, and I'll get to those. And any more questions from you guys, and your homework for this week? Yeah? Okay, so if there are no more questions for our guys in the room, just stay tuned. I'll give you those links. And for you guys, I'll talk to you later. I think this is our new tentative time zone. This works for everybody pretty well. Okay, so again, Thursdays, an hour after the market close. We'll be back, assuming that I'm not flying to, God knows where. But I'll try to keep you posted on Twitter as well. So trade safe out there, guys.